Good morning and welcome to Bazaar Morning Call. I am Anuj. With me, Sonia, and Nigel is filling in for Prashant today, of course. Good morning, Sonia and Nigel.
Morning.
Of course, we are in for a very interesting couple of days ahead of that long weekend because of that FOMC meet. But what happened overnight was very interesting because NASDAQ, which has been the weakest index, bounced back from its 52-week low. And normally NASDAQ leads global market, right? So that has led to a global rally this morning. And if you look at the Brent crude, it's back down to $100 per barrel, 101 thereabout. That's, of course, a big positive for us. The market tomorrow will react to FOMC decision. A 25 basis point rate hike is baked in. There's an outside case of 50, but that in current environment looks completely unlikely. FIs have sold again, but the quantum has been low. That's a bit of a relief. But the other risk which is emerging, and we'll talk about that, is COVID, especially in China, and not just China, other countries as well. But all things being told, the SGX Nifty is indicating that for starters, we'll once again test the 200-day moving average on the Nifty. Whether we take that out or not, let's find out. Sonia, hi.
Hi, good morning, Anuj. Good morning, Nigel. And I mean, that's the million-dollar question, right? Because we've seen many days of gains now. So whether that 200 DMA gets tested or not, only time will tell. But across the board, it's a relief rally, right? I mean, whether you look at the Dow, you look at the Asian markets this morning, Hong Kong is up, what, almost about 520 odd points. In fact, it's getting better right now. The SGX Nifty is up about 1.6%. Crude prices are now down about 27% from the top that they saw a couple of days ago. So that's a big relief on crude. Brent is back at $100 a barrel. And gold has been sliding as well. So that is a clear indication that risky assets are back. Let's also look at the FI data. Of course, Nigel will talk more about that. But once again, as we were talking about it earlier, DIIs continue to buy. FI selling has gone down a lot. So, Anuj, that's the big question. I mean, is this just restricted now to a pullback rally, or has it now extended to a buy on dips? Because there is perhaps a lot of money waiting on the sidelines, as is the case when geopolitical risks occur. People wait for that dip to buy. Is this the case?
Sonia, the answer to this question lies in what happened in yesterday's trade. Because we had a 5-day rally, and yesterday looked like a classical reversal. But we now know is that the market is positioned for short covering right at the open, going by the way the rest of the markets are doing and the way the SGX Nifty is doing. Yesterday, we had a bit of a breakdown, and after a 5-day rally, that would have given confidence to a lot of people to go short. And that's what happened. If you see the FI data in index futures, FI has actually unwound 10,000 longs and added 4,700 shorts. You look at index calls, FI has net added 22,000 contracts on the short side. If you look at the puts data, FI has added 16,000 longs. So you put all of them together, there's heavy shorting which took place from the big boys. And when the big boys short and they don't get follow through, they cover. As simple as that. So what happens? This morning, shorts will be trapped. Now, the key number to watch is yesterday's high, 16,928. If you trade above that, 16,928, if you trade above that, say for an hour or so, then you will see a big short covering, and then even 17,000, 17,100 is possible. The reason I say that is that normally gap ups and downs have not shown follow through. And that is why, most of the covering either on the long side or short side happens just at the gap up or gap down. After that, through the day, individual stocks react, but the markets do not react much. Yesterday, of course, was an exception. I think the key index to track is the Bank Nifty. Now, for 2 days, I've been talking about this fact that there's some unfinished business for the Bank Nifty at the 20-day moving average. Where's the 20-day moving average right now? 35,775. And the 200-day moving average is 36,700. If this is that mean reversion trade which is happening, which started with Nifty, then it should happen with the Bank Nifty as well. Of course, in market, you have to be prepared for what happens if the market do not respect the upside. In that case, yesterday's low becomes line in sand, both for the Nifty and the Bank Nifty. And just one last point. Last hour, there could be a lot of volatility because of the FOMC decision. Now, the anecdotal evidence, I normally talk about how markets go long into the Fed event, but this time the anecdotal evidence has zero value. You can throw it out of the window because, this could be completely different. And I think it would make sense for people to perhaps square off their positions, come back tomorrow morning. I can tell you one thing, tomorrow, regardless of any gap up or gap down, the market will give you a big directional trade from tomorrow onwards. So you don't have to really necessarily catch that gap up of tomorrow. You do your trades, whatever it is. If you're a trader, square off your positions, say around 330, take a fresh car tomorrow morning. Ajay.
Well, morning Anuj, morning Sonia. Well, you know, Anuj, as we've learned in the last many years, having shorts in the system at times is not such a bad thing, particularly on days like this. People say, hey, there's a big, addition on the short side. I think today it could be a bit of a blessing in disguise because the FIs, they're not buying, though the selling has gone down considerably. And this week itself, well, if you take the average of the last couple of days, it's around 700-800 crores odd. If you take a look at what they have done in March earlier, well, they were selling, on an average close to 5,000 crores on a daily basis. And in February as well, the second half, that's post-Valentine's Day, well, they were selling close to $500 million in a single trading session. So good to see that the FI selling is cooling down a little bit. And the other positive for me is, we talk about crude holding above the $100 per barrel. India is not very cheap. Valuation-wise, we're rather expensive. Well, we got a couple of headwinds ahead of us. But even in that sort of a backdrop, well, India has done a relative outperformance in the month of March itself, which, you have to say it's fairly positive. And finally, everyone's been talking about metal prices moving up. And metal stocks have been doing well. Now, I'd like to track the demand side of things. Yesterday, we had the management of Tata Steel, Mr. Narendran. He briefly spoke about track the demand side as well. Hopefully, there's no demand destruction because prices have gone up drastically. So, and given that it's the end of the quarter and the end of the financial year as well, the companies will also be focusing on volume. So, will there be a bit of a volume push? And yesterday, after a while, the metal index ended at the low point of the day. You had Tata Steel, Hindalco, JSPL, all of them did see some selling. So, I'll be interested to see if these stocks could open up in the green. But let's see what they do from here on because prices have gone through the roof. What else, Sonia?
Oh, absolutely. And a lot of this perhaps has to do with what's happening in China as well, right? I mean, the lockdown, now 30 million residents are under lockdown in China. That's definitely going to have an impact on business, on consumer sentiment. Yesterday, China reported 5,280 new cases, which is more than double of the previous day. So the rise is happening at a rapid pace. And Shenzhen, which is, a key trade hub, they've shut down their port. So Shenzhen has suspended trade services to Hong Kong. That raises concerns of a trade disruption as well. Hong Kong has reported about 26,000 new COVID cases on Tuesday. So supply chain across the world could get disrupted. A small auto hub in China has also been shut down as of yesterday. So, these are certain things, Anuj. Of course, there are worries on the sidelines for now. But do you think it could have any major ramifications on the market?
It can. For last many days, I've had this sinking feeling about COVID. Sonia, now I'm not a virologist, so I don't know, how these things evolve because, the readings I've been doing are indicating that perhaps this is not Omicron, a new variant or sub-variant. And so, look, the only point here is that as we have learned, you can't make your decisions preempting what COVID could or could not do. You have to go on with your life and, take your precautions and hope that, things will not get bad again. That's all you can do, from business point of view as well. That's all you can do. I mean, and of course, China is completely different case because, China follows a complete zero COVID policy. For them, that's the way they curtailed it last time as well. Of course, you have arguments on both sides, but that's how they do it. Every country necessarily does not have to follow it. So I think, of course, there's COVID on one side and there's this Fed outcome on the other side. So obviously, in the next few days, there's going to be a lot of global events and the markets can easily move, 2,000 points in either direction. That's why I said, you don't have to catch every small move as long as you're able to catch the big move. And I think over the next 2 or 3 days, the market will give you some sense of a big directional move, whether it's towards a new all-time high or towards the recent lows. I think we'll find out soon enough.
Okay, well, let's see. For now, the SGX Nifty is indicating a big rebound, a big up move, 250 points high, I think, the last time I checked. And of course, most global markets are also well in the green. But we have lots of opinion coming through for you. So first up on the equities front, Michael Hartnett of Bank of America says that the Russia-Ukraine drives fund managers survey cash levels to the highest since April 2020, global growth optimism to the lowest since July 2008, but investors still expect Fed hikes. He says the fund managers survey equity allocations are down, but not at capitulation levels. He says the BOFA bull and bear indicator is at 2.8. That is not yet extreme bearish. On positioning plus policy, Michael says it's too early for a contrarian buy call, and he remains tactically and cyclically bearish.
Okay, let's get you some money market views then. Kunal Sudhani of Shinhan Bank says that updates from Ukraine, China's worsening COVID-19 conditions and Fed's rate hike, along with a view on future trajectory, are being watched carefully for fresh impulse. Oil prices plunge on easing supply concerns and rising COVID cases in China. which will support the rupee. For the USD INR, 76.10 acts as support, while 76.60 is resistance.
Well, let's get you the bond call of the day then. Dhaval Dalal of Edelweiss says that bond yield prices continue to trend higher amidst the continued geopolitical risk, upward trending US Treasury yields, and an inflationary environment. Dovish comments by the Deputy RBI Governor, light market positions and loss of carry may be reasons for optimism. They express caution here as fresh supply and MPC are weeks ahead where policy stance may be changed to neutral. He expects the 10-year bond yield to trade in a range of around 6.75 to around 6.95% till then.
All right. Well, the Fed Reserve's two-day meeting will end later tonight, and expectations